Hi, this is Brahmin. Welcome to another episode of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today, we'll take a look at a rounded bottom trade setup. A rounded bottom trade setup is when price comes to a key level and then just holds above that support resistance level and finally reverses the price action, and now price is moving higher. So let's go on to the charts and we'll take a look at what this rounded bottom trade setup looks like on the charts, how to identify it, where to enter the trade, where to place the stop loss, and as always, how to exit the trade with a profit. Here we're looking at a rounded bottom trade setup. This is pound yen 1 hour chart. A rounded bottom trade setup is when price comes into a support level and then gives us a bit of a semicircle at the bottom. It has a rounded bottom instead of just taking off rapidly from a support level. It comes low, pulls back, makes a lower low, pulls back, and then slowly starts to go back up, giving this rounded formation in the bottom. It's not a straight double bottom or anything like that, but it slowly kind of moves to the upside. When we see this rounded bottom trade setup, we know that price is likely to turn around because it's slowly picking up those orders from the bottom, and now it could turn around from here. So in this case, we see that price is coming down here and it starts to then move up slowly here. Price comes into the support, pushes up, tries to make a lower low here, but then pushes off of that. We see pins here, tries to make a low again, but now this time this low is higher and it slowly starts to kind of push back up. So in this case, we could take a trade once we see that price has finished this rounded bottom here and it starts to go back. Even here we see this small rounded bottom here. So once we get this candle close, the green candle close here, we can take our entry long. Our stop can go below the pins here. We do want to make sure that there is room below here in case price decides to come and test this level once again. So we enter the trade long, stop goes below here, and now we stay with the trade as price is moving higher. And then we see when price comes into this previous support resistance level, this is also our R3 pivot point level. We see that price starts to give us these pins, and then we get a nice bearish pin bar. So this is a good place for us to exit the trade. From entry to exit here, we get 115 pips in our trade. So just to recap, a rounded bottom trade setup is when price drops and then it's trying to go lower, but it is not able to. And in trying to move lower and retreating from that support level, it creates this rounded bottom formation, kind of like the bottom of a bowl, and then it starts to move higher. So once we see this kind of a behavior, we know that price is likely to move higher now because there just aren't enough sellers left to push the price lower. We can enter the trade long here after this candle completes, and we enter the stop below our pins here. We stay with the trade for as long as price is moving higher. Once it comes into the next support and resistance level, we see that we have multiple pins into this level. So this is a good place for us to exit the trade. From entry to exit here, we get 115 pips in our trade. So our profit is 115 pips or $1,150 if trading one standard lot. Thank you for joining me today. I hope you enjoyed this episode. If you like this video, please feel free to share it with your friends and like, comment, and subscribe below. That's it for today, and I'll be back with another episode next time.